In the weeks leading up to earnings season, everybody was saying earnings season, especially when it comes to big tech and this AI trade, it's a show and prove time. We need to see it. Are you worried that the earnings when it comes to the tech sector may not live up to these really lofty expectations? And if you're worried about it, what are the market implications? What should we be thinking about?
I'm not so much concerned. What we're seeing is they're still growing their earnings. It's just trees don't grow to the sky, so they're not growing them as fast as they have been in the past. And they're not all the same. Tesla's problem is they're not selling enough cars. That's not so much a tech issue. It's just they had 80% of the market share in 2020. Now it's 50%. They're not selling as many cars as some of their competitors. But Google and Alphabet, you'll see the same thing probably with Amazon and Microsoft. They're making money. But there's a silver lining in the sense that if you look at the CPI numbers, they just dropped by 0.1%. And that's coming right before the FOMC meeting in September. That makes it more likely for the Fed to start cutting interest rates. And when that happens, increase liquidity, that's good for the tech space.
Ivory, before we get to the Fed, I want to go back to the Alphabet reports. You're right. They're certainly making money. So are the other big mega cap tech names. But they had a miss in the ad business when it comes to YouTube. The ad business becoming a bigger part of the business for both Amazon and Microsoft. Also Meta. I mean, can't forget that. The primary business for Meta, in fact. And then Alphabet said something I think that really caught a lot of investors' ears. They're continuing to spend on CapEx, $12 billion guidance for this current quarter, I should say. But at the same time, they're saying hyperscaler capacity might be getting overbuilt. Isn't that concerning if you're an investor in pretty much anything because tech's so dominant, if you're an investor in the S&P or just an investor in big tech?
It is a concern. And what's funny is that it's consistent with what we're seeing with GDP growth, right? So GDP growth was at 1.6%. It's decelerating. And that's reflected in the ad growth, right? That shouldn't be a surprise. But again, the silver lining is whenever we have economic growth start to decelerate, the government spends a lot of money. We have 7% deficit spending right now. It's almost like, we have helicopter parents for adult children. And so I think the government's going to step in. That's why I'm not worried about recession. I'm not worried about the earnings because I think that'll get filled in by, public spending.
So, by the way, Ivory, taking a look at futures right now, at session lows right now. Again, looks like the Dow would open up more than 200 points lower. I just want to pull on this earnings thread one more time, if you don't mind. Our data team, they actually put out a great chart looking at the earnings growth of the Mag 7 compared to the rest of the market. According to their calculations, the yellow line's the Mag 7, the blue line's basically the S&P 493. The earnings growth of these Mag 7 stocks, they're going to decelerate quite dramatically over the coming quarters. We're on back-to-back years of rallies in the broader market and rallies when it comes to tech. Are you worried that this may be the start of that decline? Is it time for sure to rotate out of these big tech stocks and just kind of diversify your plays? Or in your mind, do you have confidence in that big tech trade and investors should just continue to push on that?
So let me just back up a second. You should always rebalance the portfolios. You sell the winners, you buy the losers. You're seeing that with, the small caps are starting to do well. But there's one caveat, and I keep talking about the liquidity and the debt because they have to monetize this debt. And this is what's different for tech versus other asset classes is that tech does really well when you expand the balance sheet whenever there's liquidity, especially if you compare it to like the S&P and other indexes. So even though earnings are going to plateau and they've been driving the market, the one advantage they have is that as liquidity starts to increase, and that's why I talk about the deficit spending, things like even Bitcoin and NASDAQ outperform the market relative to how they dilute the currency.